So do your financial due diligence, revenue, review the rent roll in the T12. We talked about that. You want to review your current lenders. Some of these survive closing. Like if you may have a laundry and a cable contract, that will survive closing. So knowing the contracts you're taking on, like some of them can survive closing. And you could buy into things that someone could just take on a 10-year contract that's not the best contract, and maybe they're selling it to you 1 year into the contract, and so you have 9 years of that contract. So understanding the contract you're buying, right, is very important. Understanding your utility usage. This is very important. There's many properties based on when they were built. They're master metered properties, so the owners are paying the majority of the properties. There could be the opportunity to bill back tenants. There could be the opportunity to separately meter them. That could be expensive, right? There's things you can do, but you also want to track really. I've had stories. I have friends, and don't know if I told you this. I had a friend that they found that the water bill was crazy, and the prior ownership or the sellers weren't doing anything about it. But when they were doing their inspection, there was a guy filling up the pool, and they asked the guy why he's filling up the pool. He said, "Well, I pretty much fill up the pool 2 times a week because it just was kept running low." And so they found out there was a crack in the pool, and that was like like $50,000 that they were spending in water every year. Some guy would just saw the pool, and he was just being a good guy and just filled the pool every two times a week, right? But like crazy stuff like that, right? Just some guy thinks he's doing the right thing. The sellers are like, I guess it's $50,000 of water is what is right, but then they were able to just fix the pool $10,000 and all of a sudden cut the water bill down, right? So if you look at that and understand, like, okay, what should water cost, right? I think Louisville at the time, it was like every tenant was like $55 to $65 of water per tenant, right? And so if you think about that, okay, cool, you get a barometer. So if there's a property running at $150 per tenant, what's going on here? What are they doing, right? Is there something there? Is it like they have washer and dryers? Like, what are they doing? Right. There's other stories where they would catch someone like running like laundry out of like a laundry service, like out of their unit. Right. Like that's out there. Like there's things happening. Like but if you don't know what you should operate at, it's going to be harder for you to find that out. Remember, these are big ships. Like they say like they're the Titanic, and like it's flip. You go in there, you make changes very quick. Right. These bigger buildings, if you're missing a water bill or something like this that's out there, it's 3, 6, 9 months because you're not proactively checking it. Well, it's harder to turn that around, but that's also been a lot of costs. So the more you can get dialed into what those numbers are, and it doesn't mean that you have to be on a part, but you can have team members working on this. You can call the utility companies. You can do a lot of things to just understand the nature of the buildings that can give you a lot more feedback, and then you start growing with it. Right. So the more you do this, the more you have people around you, especially the property managers are very important. You can find a good one. They can be so powerful because they're your day-to-day, right? They're doing all the piece of the puzzle of making your business plan successful or not successful. And they're also going to give you the narrative. A good property manager is also going to tell you when they don't believe in the business plan because here's why, or these are the things where maybe you're off on. So having that guidance too is very beneficial. Look at finding other income. Can you bill back utilities, RUBS? Is there pet fees or different rent schedules that you can do based on different allocations? First floor units more valuable than the third floor, so it's a walk up, right? Or one's closer to the elevator, or one has a better view, or one's closer to the parking lot, right? Is there different rent schedules you can do? Can you do move-in fees or different attractive part? Is there what did we used to do? We used to do on properties, we had referrals for tenants, right? If they were a good tenant, they brought another tenant, they would get a referral fee, right? Access to taxes and the purchase. Non-controllable expenses, taxes, utility, insurance, right? Those are the things that are going to be pretty hard line when you get in your property. So knowing where they are and knowing expectations of where they go in the future, that's very important. Especially properties like Texas where the taxes can be such a big driver, right? It can be very detrimental to your property. So understanding some of those costs, because on the other side, you could have 5 employees, you could have 2 employees. You could do no marketing, you could do a lot of marketing, right? You can do things on the other side to change the controllable expenses, but the non-controllable are just going to be there, right? So you have to make sure you understand how they work, and the more you're dialed in and being in one area, the easier will that be. You call the tax assessor, understand what the tax will be, you get a read case, so as properties continue to come up, you'll be quicker to understand those variables that you don't have control over when it won't be variables, non-controllables. Quotes from bankers and insurance.